Namaste, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It is Monday morning, December 23, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. The stock market highlights from Friday, December 20, 2024. It was bloodbath on Dalal Street last week as benchmark indices, the Sensex and the Nifty 50, recorded the steepest weekly fall in 2 years amid global market volatility that weighed heavily on investor sentiment. The Nifty plunged into a technical correction on Friday, December 20, shedding 10% from its all time high, while the Sensex tumbled nearly 1,300 points from its intraday peak amid widespread sectoral weakness. With Friday's fall, the Sensex has shed 5% for the week, plummeting over 1,000 points for 3 out of the 5 sessions. As a result of the relentless fall, around 17 lakh crore rupees worth of market cap was wiped out of the BSE listed firms. On the other hand, the Nifty 50, which also happened to drop around 5% last week, slipped below its 200-day exponential moving average, DEMA, to fall back into the correction territory. This means that the Nifty 50 is now down over 10% of its record high. On December 20, marking the end of the week, the Nifty closed at a 1 month low of 23,587 with a cut of 1.5%, tanking 364 points, while the Sensex also lost 1.5% or 1,176 points to close at 78,041. Tech Mahindra, IndusInd Bank, Trent, Axis Bank, and M&M were the top losers on the Nifty. On the other hand, Dr. Reddy's Laboratories, Nestle India, ICICI Bank, JSW Steel, and HDFC Life Insurance ended with marginal gains. The broader market sentiment also tilted towards bears as the Nifty Mid Cap 100 plunged 2.8% and the Nifty Small Cap 100 was down 2.2%. With this, the Nifty Mid Cap 100 and the Small Cap 100 indices continued their downward journey for the fourth day on the trot. For the week, both the indices were down 3.5% each. Foreign institutional investors have sold off holdings worth 8,000 crore rupees over the past 3 sessions, reigniting fears that FPIs could sell holdings like they did in October. For the year so far, FIIs have net sold 2.94 lakh crore rupees worth of shares. Investors saw a staggering 9.1 lakh crore rupees in wealth wiped out, marking the steepest weekly fall in 2 years. Apart from these, all the sectoral indices ended in the red yesterday, with the Nifty Realty, Nifty PSU Bank, and Nifty IT falling the most. Nifty Bank Index also dropped 1.5%, which took its weekly fall to 5.3%. Nifty IT emerged as the biggest laggard, dropping over 2% even as Accenture's strong first quarter earnings failed to lift sentiment. The Nifty IT index tumbled 2.6%, erasing early gains of nearly 1% as profit booking took hold. Losses in heavyweights like TCS, Infosys, Wipro, and Coforge weighed on the index despite overnight gains of 2 to 3% in Infosys and Wipro's ADRs on the NYSE, fueled by Accenture's upbeat outlook. Other major indices, including Nifty Bank, PSU Bank, Auto, and Realty, fell up to 2%. Nifty Bank was dragged down by HDFC Bank, ICICI Bank, SBI, and Axis Bank. In a dramatic shift, early gains in Nifty Energy, Pharma, and Metal, which had risen nearly 1% each, reversed sharply in the afternoon as selling pressure pushed them into the red with losses of nearly 2% each. Among individual stocks, shares of Siemens were sharply lower by 10% after analysts were disappointed by the fine print of the investor call, which alluded to a stagnant private capex and concerns regarding the supply chain for digital industries. In the call with analysts, the company confirmed that private capex has not picked up meaningfully, souring the sentiment for the share price. RBL Bank shares tanked over 7%, falling for a staggering seventh trading session in a row. The sharp plunge comes after Morgan Stanley Research downgraded its price target for the lender. Morgan Stanley also lowered its earning projection for RBL Bank, cutting forecast by 1% for fiscal 2025, 9% for fiscal 2026, and 2% for fiscal 2027. Masdar Dock shipbuilders also tumbled over 6%, extending the fall for a third session in a row. The decline comes after the stock recovered 36% from the lows of November. For its stock split, the company has decided on December 27, 2024, as the record date. The state-run shipbuilder will split one share of rupees 10 into two shares of rupees 5 each. India VIX, the barometer of to assess market anxiety, ended 4% higher to close above the 15 levels. In the US on Friday, US stocks rebounded after a cooler than expected inflation report. The personal consumption expenditure PCE index showed a 2.4% rise in November on an annual basis, just below the 2.5% estimate of economists. The Dow Jones Industrial Average reversed from earlier losses and rose 498 points, or 1.18%, to 42,841. The S&P 500 gained 63 points, or 5,939, and the Nasdaq Composite gained 199 points, or 1.03%, to 19,572. Brent crude is $72.94 a barrel. Gold is rupees 76,600 per 10 grams. Silver is rupees 88,430 per kilogram. Now for today's outlook for the Indian market. During the week, the market slipped below the 20-day and the 50-day simple moving averages, SMA, and post breakdown as selling pressure intensified. Technically, the weekly charts have formed a long bearish candle, and after a long time, the Nifty closed below the 200-day SMA, which is largely negative. As long as the Nifty remains below the 200-day SMA or 2,000 or 23,800, weak sentiment is likely to continue. Below this level, the market could slip to 23,400 to 23,200. On the other hand, if it rises above 23,800, the pullback formation is likely to continue up to 24,000. Further upside may also occur, potentially lifting the market up to 24,200. Stocks to focus on today: NTPC Green Energy, TCS, Team Lease, Ultratech Cement, Laurus Labs, Aurobindo Pharma, HCC, Fortis Healthcare, India Cements, Dalmia Bharat, Vedanta, Piramal Enterprises, Renaissance Global, AGI Greenpack, Indian Oil Corporation, and AJS Transact Technologies will be in focus on December 23. That's today. That's it from me for today. I will see you again tomorrow morning. In the meantime, please do subscribe, share, and like this video. Thank you. Happy investing, stay inspired, and remember, it is all about money.